Aloha, good morning, and welcome. Aloha Friday. And today we have Duncan again here, and he's going to be talking about what's going on in the mortgage world. He's the CEO of Infinite Financial, and I love talking to Duncan because he studies the market, the stock market, the mortgages, and we get very intellectual with what's going on with Duncan. So, Duncan, why don't you start and tell us, what's happening right now, with the mortgage business?
Hi, Caron and everybody. In the mortgage business, we've had a slow couple of years with mortgage rates having risen up from the lows from a few years ago. As people know, rates are a lot higher than they were a few years ago. They have come down from the peak last year. So we're in an environment where inflation ran up significantly after the pandemic, with the government pumping all this money into the economy, giving people money for sitting at home doing nothing. So when you add all this money into the economy, obviously that makes prices go up because more people have more money for the same goods and services, and so prices go up, and that caused inflation. The inflation caused interest rates to go up, and the Fed has recently, they had to hike the short-term rates to control that inflation, to keep inflation under control. So now we're at a point where the short-term rates hit a peak, and the Fed's just started cutting the rates in September. They're going to cut the Fed funds rate, which is the short-term rate, next Wednesday, the 18th. So they have a meeting then. Everybody knows they're going to cut 0.25% then. Just like back in September, everybody knew the Fed was going to start cutting rates. That doesn't mean, so one of the big things, the misconceptions people have is, people think, oh, the Fed's cutting rates, that means my mortgage rate must be lower, or if I'm buying a place, that means I'll have lower mortgage rates. But that's not the case. What happened is, before the Fed cut rates in September, mortgage rates had dropped almost 2% from the high from last year. So the market, the long-term rates are controlled by the bond and basically the mortgage-backed securities market. So investors and traders, they know what the Fed is, or the expectations are in the market, and they know everything that's available in the market, and that's priced in. So they had priced in that the Fed was going to start cutting rates. So when they finally did cut the rates on the short-term side, the long-term rates bounced back up, and they bounced up almost 1% from the lows. The rates were still about 1% down from the high, and the Fed still isn't down 1% from its high on the short-term rates. But the market's longer-term trend together, but people have to understand short-term they don't, because the market for the long-term rates is driven by traders and investors. They already know that the Fed's going to cut by 0.25% next Wednesday. So that doesn't mean that the mortgage rate's going to drop by 0.25% next week, Wednesday. I wish it were that easy, but rates could go up in reaction to that, like they did last time when the Fed cut in September. So the Fed has cut in September, and then last month they cut another quarter. So they're going to be expected to cut next Wednesday, and then a couple times next year as well. So longer term, we do expect the mortgage rates to go lower, but it could take a couple of years to get down significantly. Don't, just because you hear the Fed's cutting rates, don't expect the mortgage rates to be all of a sudden a lot lower. They are trending lower, and they are over 1% down from last year's high. So we're in a market where the mortgage rates are slowly coming down from the high, but as they trend lower, they'll go up and down month to month, and then just year to year. The next couple of years, I expect to see mortgage rates move lower. And then the real estate market has been held up the last couple of years as well. You haven't had as much volume because you don't have as many people who can qualify for the home purchases, and a lot of the sellers are waiting for lower mortgage rates too, because a lot of them need to buy places when they do sell their place. So it's held up the inventory. So we've been in a situation, we've had really low inventory, and prices have not dropped, at least not dropped significantly in the real estate market, because the supply is not there. There's not much inventory. There aren't people selling because there aren't a lot of new homes being built. At least in Hawaii, there aren't a lot of new homes being built. So you don't have enough supply for the inventory, to increase the inventory for the demand. We have a lot of millennials reaching first-time home buying age, and a lot of the young people, they cannot afford to buy, or they're waiting for mortgage rates to come down. And there's a lot of people that normally would be buying, but with rates higher than they have been, and with prices higher, not as many people can afford it. And so I think we'll see a pickup in the volume on the real estate side and the mortgage side as rates move lower over the next couple of years. But people have to be patient. It's not something that's going to happen real quickly, but the longer term, we will see rates continuing to move lower.
Yeah, and that's what we're seeing. So, a question I have is like, as far as the amount of mortgages that mortgage brokers are doing right now, is it still relatively low and tough out there in your business?
Yeah, it's near historic lows, the lowest ever for last year and this year. For us, we've had a pickup in business fairly recently. One of the big issues here in Hawaii is a lot of people can't get mortgages on condos because a lot of the condos don't have sufficient hurricane insurance. Fortunately, we do, as a mortgage broker, we do have a couple of lenders that can do finance those condos. So we're doing deals that other lenders can't. So we take over a lot of loans from other lenders, or we close deals that other lenders can't because we have access to dozens of different lenders, and we're able to solve these issues. So for us, business has picked up the last few months. That has been an unfortunate issue for most of the industry, but overall in the industry, it has been a lot slower because rates are higher. But we did see the rates drop almost 2% from the high earlier this year. So we started to see people starting to refinance. So that started to pick up. But then with the rates bouncing back up in recent months, that's been slowing down a lot too. So we're starting to see refinances pick up. I think we'll see the business pick up over the next couple of years. As the rates drop, we'll see more refinances, and we'll see more purchases as the volume comes in and more inventory comes in. It's interesting that in Hawaii, we've seen a little bit of a dichotomy between the condos and single family homes. The new builds, at least on Oahu, tend to be condos because there's not enough land to build out single family homes. And a lot of the condos are having, not only you have the additional supply from new condos being built, you have an issue where like I mentioned, the hurricane insurance, a lot of the condos are having trouble getting sufficient hurricane insurance for 100% coverage. For them to do that, they have to pay several times what they used to pay, and that would mean maintenance fees would have to go up a lot. So either maintenance fees have been going up a lot, or they don't have sufficient hurricane insurance, or both, which makes the condos a little harder to sell and people can't finance them. That's where we have been able to step in and fill that gap and to help people get financed. But people need to be aware that with inflation, costs have gone up, and with all the natural disasters that have been happening worldwide, that affects the insurance market and affects the availability of hurricane insurance. Even if there's never been a hurricane that really hit Oahu hard, when you have hurricanes hitting other areas, the insurance companies, they have to suffer losses, and they have to raise their rates in other places. So even single family homeowners, like my hurricane insurance went up a lot recently. I think most people are going to see big increases to their insurance costs.
And I know someone who works, for one of the boards of an association of a condo, and, they found a really good insurance agent, and they've been working with her. And so it takes a lot of hard work to get those rates down. But, if you put the work and the vision out there, it happens. And, it's funny, like I went and saw Victoria Place this week, and, absolutely stunning luxury new building, absolutely gorgeous. But even though in the older buildings, if the insurance has gone up, the maintenance fees have gone up, sometimes it's good to look at the older buildings. You're getting a lot for your money with the older buildings. I mean, there's this, I think I've always said the older buildings have the square footage. So if you're looking for the larger square footage, looking at some of the more luxurious older buildings is definitely worth it. I think probably you'll see more conservative list prices out there if someone wants to sell their home. And I think there's a lot of good value out there with the older buildings, even with all these other costs coming up right now.
Yeah, I think the condo market's more in balance, where you have inventory. So if you're looking for a condo, there's more availability, whereas a single family home market, there's such low inventory in certain neighborhoods. And it's just based on the location too. Some neighborhoods are much harder to find properties. Some have more availability. So it really depends. It's real estate is local.
Well, I mean, single families are always great, but it's you really have to be careful of the maintenance. And so I know some people are just buying a fixture up and saying, we'll fix this up over years. Well, sometimes the cost of that is prohibitive. You'll get there and not realize how much it really does cost to remodel or rebuild. So it's something, working with an educated realtor on construction costs, on options out there is so important. And to be able to just sit there and consult with a good agent is very, very important. But I
Exactly.
wanted to say thank you for joining us today. And it's like, it was, it's good to hear what's going on in the mortgage business. And I know we're busy trying to figure out, where pricing of condominiums are because of all the factors you're saying.
Yeah.
And there's definitely a shortage of property, definitely shortage of single family homes out there that turnkey move in.
Yeah,
But
and the
anyway,
combination here in Oahu, at least, it's a combination of not having enough land to build on, and the permitting
yeah.
department is so backwards. They just take forever. So just to have sometimes to just do simple renovations can take a couple of years to get the permit approved, and so it's a very difficult process to add inventory. So that's something that I know the legislators have been talking about doing different things, and so we'll see some changes in the rules that for density in the market too. I know there have been discussions about ADUs being added. I think statewide they're trying to implement where neighborhoods are going to have to allow ADUs. So I think in the next couple of years we'll see some resistance to that, because some neighborhoods don't like to have more density where parking on the street can be harder and infrastructure can be.
Yeah, I don't know if I would be for that either, because some people, just like, the VRBO, you don't want, a zillion people next door vacationing next to you. So it's a very sensitive matter. But I think with all this said too, it's just to remember, when one door kind of closes, another opens. So never let it take away from what your goal is. Just keep asking yourself the question, how do I do this? How do I do this given the situation? Because there is a way around pivoting around everything. You just got to be creative and really get in there, be very dedicated to what your next move is and your goal, and just make it happen. It might take a little longer. You might have to pivot a little further than you wanted to, but don't let all these other things deter you from getting what you really want with your family life, as far as property goes, etc. Right, Duncan?
Right.
Wouldn't you say?
Yeah,
Yeah,
exactly. And so we are able to help a lot of people. A lot of people bought places a few years ago. I thought, wow, it's so expensive, and now
yeah,
they're so happy that they did, because
exactly.
yeah, these prices don't go down. For years you've had people saying, "Oh, the market's going to crash, the housing market's going to crash."
Yeah.
2008, that was kind of a really unique situation where people were getting all these loans that shouldn't have, and the fundamentals were so different from now. And I could foretell that there was going to be a crash there. It was just obvious with the weak foundation that we had in the market, and the overextension that everybody had. It's a totally different situation now. You have back then, you had people with a third or less of the equity that they have now. People have like about 3 times more equity overall than they had back then. So that's part of the reason that you had a lot of foreclosures. People didn't have enough equity, and you had a lot of short sales, and you had all these mortgages that were designed to people not to be able to afford it if rates didn't drop a lot and the prices didn't go up. That there were these mortgage instruments that were horrible, and we don't have those anymore. They're illegal now, so we don't have the same type of situation. So people calling for a housing crash don't know what they're talking about. With the fundamentals, we're not going to see any market crash anytime soon, because we have the millennials and the baby boomers, the two biggest generations ever, owning homes and wanting to own homes, and not all of them own homes. So there's a lot of people that need to or want to own homes that aren't able to now. So that's why even though we've seen rates go up so much and we've seen prices go up so much, that's why we haven't seen a collapse in the prices, even with such higher rates and the payments being a lot higher than before, and insurance costs. You still don't see a housing crash, because it's just the fundamentals of the supply and demand. There's just too much demand and not enough inventory, not enough new homes being built. So that's just overall from an economic geek's perspective. That's just, you got to look at the fundamentals, the supply and demand, and you have such a limited inventory, limited supply of real estate in Hawaii, and you got people from all over the world that want to own real estate in Hawaii.
Oh, absolutely. Even more so now, given.
Yeah.
But I think, unfortunately, we have to go. But we could sit here forever and talk about this.
Yeah,
But
definitely.
I wanted to thank you. But before, we'll share Marianne's photos like we do every Friday. And of course, we have to acknowledge our beautiful Christmas lights out there. Let me just downtown. So of course they lit the lights up last Saturday night. And if you haven't driven by, take the time to drive by with your family. We plan on doing it this weekend. Have you done it yet, Duncan, with your young ones?
Not yet, but we will for sure.
Yeah, they're just wonderful. But if you don't live here and you want, this is a nice representation of how beautiful they are. So again, enjoy, aloha, have a wonderful Christmas celebration, pre-Christmas celebration weekend, and much aloha, Duncan, for joining us and sharing all your thoughts and insight. Thank you.
Thanks, Caron. Thanks, everybody.
Bye.